How was the book? Because you are the is the book the best selling personal finance book ever,
Ever.
and which is incredible. And whenever I told anyone that I was like Robert Kiyosaki, Rich Dad Poor Dad, is coming on the show, everyone was like, "Yes, I know who that is. I've read the book." Um, when you first published the book, how what was it like actually speaking out and publishing the book at that time?
Well, the thing that just drove people nuts was savers were losers. I said the rich don't work for money because it's this stuff here. They don't save it, and your house is not an asset. And I was just going after what's called financial literacy, definitions. That's all it is. And if you call your house an asset when it's a liability, you're in trouble. And that's why so many people are in trouble today. Like, many sports stars, let's say you play soccer, you're a sports star and all this stuff. You make $1 billion. The first thing you do is you buy a big house. Do you know what I mean? They go, oh, now I'm a rich person. But you're getting poorer. I'm not against owning a house. I own a lot of houses and all this stuff. But they put money in my pocket. So I own 1,500 rental properties. And with that rental property, then I buy oil, I buy gold, silver, Bitcoin, Ethereum now. So I don't like to have people steal my money. I'm not that stupid. I mean, I did really poorly in school. I flunked out of school because I can't write. Ironically, my best-selling author, of course. But my poor dad was an academic genius, but he was poor. He worked hard for this garbage.
It's funny because yeah, I was never one for school either, and then I ended up building my own business off the back of not doing that. And it's funny to see how that trend is the same for a lot of founders and CEOs. But you touched on here, and I know you touch on it in the book as well, but you said that your house is not an asset. For anyone listening, there might be people thinking, oh, I thought my house was an asset. Why? Can you just quickly explain why your house isn't an asset?
Well, behind me is this board game called Cashflow, and I recommend people play it because what Maria Montessori said, what the hand does, the mind remembers. And the most boring subject in business school was accounting. So cash flow or rich dad, poor dad here, they're only books about accounting. Income statement, balance sheet, statement of cash flow. I mean, you don't have to be a rocket scientist to know that. The poor and middle class work for income statements. They want, high income job and expenses. The rich work for balance sheets. So the rich guys are talking balance sheets. Poor people are talking about, oh, I make so much money and I'm trying to save this much money. They're a bunch of losers. But they're poor people because they don't listen to an income statement and a balance sheet and a statement of cash flow. And that's what the game teaches. That's what this book teaches and all this. It's not hard. I mean, it's not hard at all. So what people do is they call their house an asset when every month taxes, all that stuff's coming out of it. Where I own 1,500 rental properties and 1,500, properties send me money every month. It's not much. It's about 200,000 a month in income. I'm not like Donald Trump, but 200,000 is more than most people make a year. But I just keep adding assets. But what happens to a poor person because they come from a small house, they go and buy a big house and they get deeper in debt. So it's because they don't know the definition. It's called literacy. you know and the thing that you got going for you, Jordan, is your Scots. And I go to Scotland. I played rugby up there, rugby union, and I went to
Amazing.
Ireland and all that stuff, and I love your Scotch. But it's not an asset. you know it's a drug. Oh, the Scotch is well, if you're selling it to, yes, but if you're drinking it. So I'm not saying don't do anything. I'm just saying know an asset from a liability. and I love fine scotch. I don't know how you guys, you got some bottles up there, $800 and stuff like this. I'm going, ooh, but it's worth it. You know, it's worth it. So the
Yeah.
Scots are naturally smart with drinking and money
Yeah.
and rugby. Okay, you guys are very good at rugby. Holy
Yeah.
thing.
Yeah. Yeah, it's funny because whenever that's kind of how I run my business as well, is because I'm Scottish,
Yeah,
it helps. Because I'm notoriously tight is what everyone calls me, and it's I'm just frugal with my money, and I know the value of things, and yeah, it's just funny that the Scots have been labelled that we are good with money, and we're fairly tight, and we won't let anyone if it's not worth it, we won't give you the money for it.
yeah, yeah. Very, very refined. You know, like Jews, Chinese, and Scots. It seems to be part of the DNA. You're just good with money. The Bank of Japan is in serious trouble financially, and so is England. Serious trouble financially. Germany's in serious trouble. You know, but the Scots will always, at least if they're not doing well, they can drink well.
Yeah. We can do that in Kaylee dance. So, um, yeah. So, do you think it then? So just sticking on that thread, do you think it then runs in the family and it's generational literacy almost? Because it's very interesting because so I just a personal story. I told my mum that you were coming on the show. She had never read Rich Dad Poor Dad, but last week she read it. She's 70, and she said it's very challenging because it is challenging her view and her mindset of money.
Yeah.
And she's really enjoying
Good.
seeing the world the way that I see it,
Yes.
which
Yes.
is amazing. And do you think that the financial literacy is passed down through generations? Um, and I guess that's the premise of the book. Of you've got the rich dad understanding it, and then you've got the poor dad not understanding it.
Yeah, I do think it's also, you know, it's a lot harder than that. But like I said, I started saving, you know, these real silver, and then my mother spent it, and she couldn't understand, you know, that this today is worth $10. It's 50 cents here, but today, let's say this is a $10 bill. So Jordan, 10 years from now, what will that be worth, and what will this be worth? Do you know what I mean? And that's why people are poor. They don't understand the intrinsic value of their money. So you look at this here, you know, I took my this is gold from my gold mine.
Oh wow,
I took it public on New York Stock Exchange. So I
that's
own
cool.
tons of gold and silver and Bitcoin. But I don't like getting, you know, effed.